The real estate boom is officially over. In the first 3 months of 2026 alone, home prices crashed in 39 major American cities. And it's getting worse. Some regions are losing 9% of their value while others face an insurance crisis that's literally forcing families to sell. But here's the thing. This might actually be your biggest opportunity. Alright, let me be direct with you. For years, everyone told you the same story. Real estate always goes up. Buy now or be priced out forever. That's what we heard during the pandemic, and honestly, a lot of people believed it. But that story just changed. According to real estate data from ATTOM, one of the most trusted sources in the industry, we just hit a major turning point. In the first quarter of 2026, we're talking January through March, median home prices fell in 39 out of 129 major cities across the United States. Think about that for a second. That's not a small dip. That's not a one-city phenomenon. That's nearly a third of America's major markets experiencing actual price declines. Now, here's where it gets interesting. Most of these cities aren't randomly scattered. There's a pattern. And if you understand this pattern, you're going to understand where the real opportunities are hiding. Let's talk about the worst hit market, Cape Coral-Fort Myers, Florida. This region didn't just see a small pullback. The median home sale price dropped 9% in a single year. We're talking about a drop from approximately $375,000 to $341,250. That's over $33,000 in lost value per home in 12 months. And here's the crazy part. Cape Coral's prices peaked in early 2023. That's right. These homes have been losing value for 3 years straight now. 3 years of decline. But Florida isn't alone. Other Florida metros getting hit hard include Ocala, Lakeland Winter Haven, and Naples Immokalee Marco Island. The Sunshine State is living up to its name in exactly the wrong way right now. Beyond Florida, where else are we seeing the pain? The Southwest is getting crushed too. Cities like Austin, Texas. Remember Austin, the pandemic darling? Places that saw insane appreciation during 2020 to 2022? Yeah, they're cooling fast. And it's not just the South and Southwest. This is spreading. More cities are joining this list every quarter. Now, most people blame interest rates when they see declining home prices. They'll say, oh, rates are too high, nobody can afford to buy. And sure, mortgage rates are sitting around 6.3% right now, way higher than the 2% rates we saw in 2021. But here's the thing the mainstream media isn't talking about. Rates alone don't explain what's happening in Florida. Because if it was just about rates, we'd see price declines everywhere equally. We don't. The real reason has a name, an insurance and property tax crisis. Listen to this. The average homeowner's insurance rate in Florida jumped 18% in a single year. 18%. And the average policy now costs $8,292 per year. That's insane. That's more than rent in half the country. But here's what's truly devastating. Some counties are even worse. Miami-Dade County, average insurance is $15,715 per year. Miami-Dade, one of the wealthiest areas in the state. And yet, people are literally abandoning their homes because the insurance costs more than the mortgage payment. Monroe County is even worse at $22,436 annually for homeowners insurance. Do you understand what that means? A person could own a $500,000 home but be unable to afford the insurance on that home. That's not a real estate market problem. That's a catastrophe. And it's not just insurance. Property taxes in these areas are brutal. Rising insurance plus rising property taxes plus higher mortgage rates equals the American dream becomes a nightmare. Let me give you a real example from Bryce Ospec, a broker running a Coldwell Banker franchise in Northeast Florida. It sits on the market and then they price drop it, then it sits longer and they price drop it, and then they end up getting beat up by buyers that have leverage. Translation? sellers are forced to panic price their homes because they can't afford to hold them anymore. It's creating a fire sale environment where buyers have all the power. Here's something most real estate agents won't tell you. People are leaving Florida. Not just vacation, not just seasonal. They're selling and leaving. A poll from Florida Atlantic University's Business and Economic Polling Initiative showed that about half of Floridians, 50%, are actively considering leaving the state because of the cost of living. And 8 in 10 of those people cited housing affordability as a major concern. Think about what that means. That's not a normal real estate market. That's a market in crisis. That's people voting with their feet, saying, I can't afford to live here anymore. And when people start leaving en masse, what happens to property values? They go down further. It becomes a negative cycle. Now, before you think this is all doom and gloom, stop. Because if you're watching this and you're not a homeowner in these declining markets, this is actually huge news. The real estate market across America is shifting towards something we haven't seen in years. A buyer's market. Remember when the saying was, buyers are locked out? When you'd go to see a house and there'd be 20 offers in the first day. When sellers held all the power. That era is ending. There is real benefit for buyers this spring in particular. Financing is a little cheaper, and you also have now the added benefit of median prices actually coming back down, and there's more homes on the market as well. Translation. The stars are aligning for buyers. And not just in one market, this is happening nationwide. Let's break down what's actually shifting. Mortgage rates, currently at 6.3%. Yes, that's higher than 2021, but it's lower than a year ago when it was 6.8%. Rates are moving in the right direction. Inventory, more homes are on the market now. Sellers know they can't sit and wait for crazy appreciation anymore. That means more choices for buyers, more leverage, more negotiating power, price adjustments. Here's the big one. April 2026 marked the 6th consecutive month where list prices came down on a year-over-year basis. That means sellers are getting realistic about what their homes are worth. They're pricing lower. They're being honest. As Krimmel said, sellers are coming in with more realistic expectations. This is significant. It means the fantasy prices are disappearing. We're moving back to something resembling normalcy. Here's something most people miss when they look at national data. While Florida and Austin are declining, other markets are absolutely booming. The Rust Belt, places like Detroit, Pittsburgh, Cleveland, they're seeing massive appreciation. Detroit, specifically, saw sale prices jump about 17% in Q1 2026 to $259,000. But because these cities didn't have pandemic bubbles, prices didn't go crazy from 2020 to 2022 like they did in Florida or Austin or California. They're now appreciating in a normal, healthy way. They're the smart markets right now. This tells you something important. Not all real estate is created equal. Not all markets are moving in the same direction. And if you can identify which markets are primed for growth, you're going to do really well. Okay, let's get practical. If you're a buyer, this is your moment. Seriously, for the past 4 to 5 years, the odds were stacked against you. Sellers had power. Prices were irrational. Interest rates were low, but homes were unaffordable. But multiple things are working in your favor. More inventory, lower prices in many markets, and rates that are stabilizing. If you've been waiting, this is the window. If you're a seller, you need to be realistic. The days of listing your home for 20% more than it's worth and expecting a bidding war are over. Price competitively. Stage properly. Accept that appreciation days are over, but you can still sell if you price correctly. If you're an investor, look outside the obvious Florida and California plays. Look at the Rust Belt. Look at smaller metros. Look at places where population is growing but real estate hasn't appreciated yet. That's where the next wave of returns is coming from. We're not in a full rebound or back to normal yet. This isn't some magical return to 2019. The market is normalizing. That's what's happening. Prices in declining markets will likely continue to adjust. That's part of this process. Some people are going to be hurt. Homeowners who overpaid in 2021 to 2022 are going to face losses. That's real and it sucks. But, and this is important, pain in one part of the cycle creates opportunity in another part. The people who bought during panics made fortunes. The people who panic sold made mistakes. Your job is to figure out which category you're going to be in. Are you going to be someone who panics and makes emotional decisions? Or are you going to be strategic and data-driven? Here's what I want you to do. First, stop listening to real estate agents who tell you prices always go up. They don't. Market cycle. Corrections happen. That's normal. Second, if you're thinking about buying, start looking now. Not at the absolute bottom, but while inventory is up and sellers are realistic. The window won't stay open forever. Third, if you own property in a declining market, don't panic. Market cycle, but also be realistic about where values are heading short term. And finally, understand this. Housing markets are regional. What's happening in Cape Coral is not happening in Detroit. What's happening in Austin is not happening in Pittsburgh. Do your homework. Look at your market specifically. The real estate game in 2026 is different than 2023. Better in some ways, scarier in others. But if you understand what's actually happening, you're going to make smarter decisions than 90% of people out there. Look, this is just the beginning of this market shift. In the next few months, you're going to see more headlines about falling prices, more panic, more opportunity. If you want to stay ahead of these trends and understand what's really happening in real estate beyond the hype and headlines, hit that subscribe button. We break down financial and real estate trends every single week, and you're not going to want to miss what's coming. Drop a comment below. Which market are you watching right now? Are you buying, selling, or sitting it out? I want to know where your head's at. Thanks for watching. Let's make smarter financial decisions in 2026. This video only for education purpose.